Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Matt Battiali, editor of the New Energy Investor, published under Mangrove Investor. Now, Matt, one of your most recent articles focused on cheap energy, a big focus being on natural gas as well, because of the increase in production that we're seeing out of the US. And, well, quite frankly, natural gas, even though right now it is just above $3, has been relatively constrained in price outside of that massive pop that we got in the price dating back to 2022 when prices went the whole way up to over $9. Now, for the last almost year, prices have been more or less right in the $2 to $3 range. Matt, what do you think is important here to understand that natural gas prices are remaining fairly restricted here, and even more importantly, it seems like production continues to stay at high levels?
Yeah, that's the ticket to these low prices. We're setting a record for U.S. production, U.S. natural gas production at a time when typically you're drawing down supply that was stored all summer. And what we're seeing right now is that the supply of natural gas in storage is at all-time highs. It's well outside of the high range of the 5-year average. So we have an enormous amount of natural gas in storage, and we're still producing an enormous amount of natural gas. So I see the gas price staying lower for longer, and that actually is a good thing because it's a really important energy source, and it's going to outcompete uh, things like coal. We're gonna see natural gas steal an even larger share of the power market from coal than we have in the past.
Well, Matt, you bring up an interesting point because, in a sense, natural gas is a byproduct of oil production, and oil production in the U.S. is at peak levels as of 2023. And so, by default, natural gas is at peak levels. How do you think the industry itself, the oil industry, is going to need to change now that they are starting to capture more of this natural gas as opposed to flare it off? And does any of this tie into those big LNG terminals that they're going to be building in the US and Canada and start shipping it abroad to Europe and to South America?
Yeah, I mean that's what needs to happen. So there are a couple parts to that. The first is that historically the small oil wells, if you didn't have a natural gas pipe available, you basically flared your natural gas. And what you did was you separated the gas from the oil and lit a basically a giant tiki torch next to your well to burn that natural gas off. And they're cracking down on that now. So there are more gathering lines. So to collect these small gas supplies from the small wells, so you're going to have incrementally even more supply than we've had in the past. That's got to find a market. It has to go somewhere. So whether that goes to new electric generation facilities where basically these you can use natural gas. You basically put a jet engine attached to a power turbine, and you can generate electricity from it. But I think the real future for natural gas is in these LNG terminals. It's exports to Mexico by pipeline, and it's compressing it, freezing it, and shipping it to Europe and Japan because that LNG market is still pretty robust. The only problem with that is that's a very expensive and energy intensive procedure, right? You have to freeze the natural gas down to make it fit into the ship efficiently, and that takes a lot of energy. So it's not a great way to do it. It's much easier to put it into a pipe. But yeah, it's got to find a market. It's got to find an outlet somewhere. And I do see it. I do see it taking up a lot of the base load. We've talked about this in the past where wind and solar power are great as long as the sun's shining and the wind's blowing. And when it's not, I still want my lights to come on and my stove to work. And so, in order for that to happen, you have to have a backstop. You have to have that base load energy that we've talked about before. And historically, base load energy has been nuclear power and coal. But now that natural gas is so cheap and production volumes are so high here, I really do expect to see much more natural gas baseload go in. A lot of the power plants that are already built have the ability to switch from gas to coal depending on which fuel is cheaper. And so we're seeing natural gas kind of out compete coal in terms of price, so it's being consumed more. I think we're going to see a lot more of that in the future.
So with this higher production, that seems like it could stick around, especially if oil production stays generally higher in the US. Does this lessen the impact on weather, on price for natural gas, which seems to be kind of that short-term driver behind some price spikes and price drops for natural gas?
So one of the problems that Texas had in that cold snap that really impacted natural gas is that they weren't prepared. So they had to shut in some wells. And so if you shut off the supply of natural gas, obviously, the price goes up. And that's what happened in Texas. So you're still going to get these short-term spikes. From an investing point of view, I'm not I don't think you can count on them. I don't think that I would play them unless I was really speculating. The sort of play that I like on natural gas right now, and it would be a long-term kind of a buy them cheap and hold them and play it for the dividend. I mean, companies like Chesapeake Energy, which is it's been it's a juggernaut gas company. It's been around forever. Symbol CHK. That's one you could buy now. It's paying almost 5% yield. It's relatively low historically for its share price. It's one you just buy it and farm the dividend on. And I think there are some other companies that are like that right now, where you just you buy it when the natural gas prices are cheap like they are today, and don't buy it for a price hike. Buy it for the fact that these guys are going to keep producing and just keep farming the dividend.
Thinking about some of the companies in the space that there's a lot of oil companies that have a healthy component to nat gas, and as you say, some pure natural gas companies that really have that as the focus. Do you think any of them will benefit, I guess, in the medium to longer term, just from the creep higher in commodity prices across the board? Many people we've brought on the show, Matt, have talked about a coming commodity super cycle, and they said really every commodity, grains, the base metals and all the energy commodities are probably still going to get a boost over time as inflation still feeds into the commodity sector. Will that hit nat gas, or has nat gas got such a glut that it's really kind of immune to some of that?
You know, I've been around this space since the early 2000s, and I watched the nat gas price climb all the way to $14 a thousand cubic feet in 2008. And I remember when we were building LNG import facilities in the US, and then the fracking boom happened. And I remember kind of sitting down and looking at the volume of rock that had natural gas in it, thinking the natural gas price is completely toast from here on out. There's so much volume that, originally when the industry first started fracking, they were fracking dry rocks for gas because they didn't think they could frack oil fields. Obviously, we now know we can, but back then, and in the first 18 months, they flooded the industry with so much natural gas that they crushed the price. And it's really that's just one of those iconic stories about a commodity. So no, I think I would not invest with the thesis that inflationary creep is going to affect natural gas, because the gas price today is cheaper than it was in 2005, I think. I mean, we can go back and look, but I'm fairly certain that we haven't seen any incremental increase just because we've unlocked so much more supply that this is one that's just not going to go up.
So let's just say natural gas prices do stay somewhat muted, maybe in a range, and uses continue to ramp up. You already mentioned the impact that it has on the coal sector. Any other energy sectors that lower natural gas prices directly impact, or any other energy sectors where they won't have an impact on it?
It's so tied to oil the one caveat I have to my cheap natural gas forever story is if we get to a point where we're not drilling oil, and I just don't see that coming. As long as you want to mobilize an army with tanks, you're gonna need oil. If there's just so many demands for oil. I just don't see in my lifetime, I don't see oil demand and therefore oil drilling slacking off. The shale revolution kind of kicked back peak oil for another century, and so I'm not very worried about that either. But I do see cheap natural gas having a very positive impact on new alternative energies because as we said, when you build a gigawatt of hydro or of wind or a gigawatt of solar, you typically want to backstop that with some base load. And in this case, if you're required to backstop it with natural gas, the nice thing is that your economics are going to work really well. So you're not going to have it's not going to be super prohibitive. So we should see more of that going on, certainly in North America, US and Canada, where the natural gas price should stay pretty low. So that's the benefit that I do see. And if we see a faster uptake on kind of the electrification process, thanks to cheap natural gas, then we're going to see more demand for the battery metals, which is what we like to talk about here. So that'll accelerate the ability for people to buy EVs, which will accelerate the demand for things like copper and lithium and nickel and graphite. And so that's an area where if I'm looking to take advantage of price appreciation, I'm looking more at the metals than I am at natural gas and oil.
Well, Matt, just one follow up on that. Nat gas is a weird market in that it's very regional. It's not like oil where it's traded on a national basis and a lot of people are looking at US dollar terms. I know oil has its own pockets, but nat gas is really segmented. So if you talk about cheap natural gas here, that is not the case in Europe. That may not be the case in a South American country. We've talked to companies that are operating in Colombia. They were getting $20 for nat gas when we were only getting 9 here. In Europe, it got up to 22 or 23 in 2022 when there was that big spike. So, are there any opportunities for companies that are operating for oil or nat gas in other regions outside of the domestic area?
Oh, absolutely, absolutely. I remember talking to a group that made a pretty good natural gas discovery in India, and I was excited for them, and I wondered, I was asking them how they were going to monetize it and where it was going to go, and they're like, oh, it goes directly to a fertilizer plant because they had been using an oil distillate to make nitrogen fertilizer, and this was going to even at they were going to get a really high price for this gas because it was still going to be a discount the to the price these guys were paying for the naphtha to make this fertilizer. So yeah, absolutely regional opportunities. You know, the Vaca Muerta shale is one that I'm watching. It's an oil shale, but it has a lot of associated gas. It's in South America. I want to say Venezuela, but I'll have to double check that. But it's that's a place where I think if you have a company that's working in there, that's an area that I'm very interested in terms of upside, where they can benefit from a higher natural gas price and and the oil price as well. And it's in an area where, yeah, that's a local sales. You don't have to put it in an LNG plant and ship it somewhere.
All right, Matt, we're going to wrap it up here. Like some considerations for everybody looking at the natural gas sector and wondering if there are investment opportunities. As Shad pointed out, there are regional considerations that you have to take, but on the U.S. front, maybe we will just continue to see higher natural gas production, again, hand in hand with oil. And that's not necessarily a bad thing to have lower energy costs after some of the spikes we experienced over the last 2 to 3 years. But on the investment angle, we do need to understand that hey, these production rates may remain elevated. Matt, thank you very much for your time. We'll chat again in another couple weeks. Hope you have a great rest of your week.